Yeah, my connection is bad. It's not on live yet.
It looks like
Showing
there's
on my end.
Okay, and we are live. Good morning.
good morning.
Good morning.
Yes, I think we are. Yep, we are. We are live. Good morning. Good afternoon. Good evening. Good good day. Just depends on where you are and when you're watching this broadcast or listening to this broadcast. My name is Clara Lyons-DeVaughn, and I am the broker owner of Lyonsview Realty. We provide residential, commercial for small businesses and nonprofits and property management services. At Lyonsview Realty, we're committed to ensuring that you have the resources, the information, and the tips to assist you in making the best financial decisions. We want to maximize your wealth building power now and in the future. So, Financial Fridays, we're here to help you. We want you to stay current on those trends that impact your bottom line. So we stream live on YouTube and Facebook every Friday at 9:30 Eastern Standard Time. So share, like, and subscribe on YouTube. You can catch the replay anytime. And if you go to the YouTube station, there's a lot of great content there that will help you and assist you as you move forward. So today we have some very, very, very special guests. Um, Lots of people are thinking about purchasing property. And sometimes, you know, you got to hit the ground running with the base. You've got to set a good foundation. And that good foundation wraps itself around money. Where do you get the money? How do you get the money? What do you need to do to prepare? And our guest today, we're going to jump into that a little bit later, but I would like to first welcome Joseph McGuckin. Make sure how do you pronounce
It's
your last
McGuckin.
name? McGuckin?
McGuckin.
McGuckin.
That's yeah.
Joseph McGuckin and Xavier Roman, who are here with us today. Hello, gentlemen. How are you?
Hello, Clara.
Good
Doing
morning,
great.
Clara.
Can't complain.
Thanks for having us.
Yes.
Thank you for coming. I'm so excited. We've got a lot of information that we're going to go through today, but start out by sharing a little bit about yourselves, how you got into the industry, something about your family, your favorite joke, whatever you want to share.
Go ahead, Xavier.
All right. Thank you again for having us. It's a blessing to be able to be here and to be able to help out people in general. I pride myself in saying as though that I've been in servicing industry for over 20 years. I was blessed to join the mortgage side of the industry, real estate, in 2013. Had the privilege of meeting Joe back then in 2014, 2015. Briefly left the industry in 2016, came back in 2019, and this is where I see myself. It's just a blessing to be able to see people and help people reach their home owning dreams. I myself have owned my property since 2006, so I know what a joy it is to be able to be a homeowner. And that's the joy that we like to bring people as well, be that first-time home buyers or be that those that are buying for financial freedom, investment properties. And it's something that we pride ourselves in doing. Great thing about me being a family man is that my wife and I adopted our 2-year-old daughter in September. She's truly amazing. It's something that I never knew that I was missing until I found her and had her since 5 months old. So it's a blessing to have. And that's mainly it about me. I'm a homebody. But yes, thank you so much again for allowing us to be here.
Oh, thank you. Thank you. That's really beautiful. Children definitely enhance the home, and
Yes.
it's nice that you are, yeah, that you are a homeowner. So, you bring that perspective firsthand, which is important as well. Joe,
Thank you.
tell us a little bit about yourself.
Good morning. Good morning. Nothing too exciting. Born and raised in southern New Jersey. Grew up in a town called Merchantville. Lived in other parts of the country, came back to this area, been married since 1989, have 2 grown children, and live in the Cherry Hill area now. I've been in the mortgage business since 1986. So we got a bit of experience. We've seen some upturns and some downturns, and just to Xavier's point, just at a great place at First Colonial. We do a lot for the community, and we really enjoy helping people live the dream of home ownership.
Wow, that's pretty awesome. And you both know better than anybody how important it is for people to have their finances in order to kind of get into home ownership. So, what would you say, if you're talking with someone and you wanted them to pull together a set of documents that they would need? What documents would they need to pull together, or maybe even before that, are there other steps that they may need to take to get ready for the mortgage process?
Yeah, well, if I could jump in, it gives you, I mean, it depends on the program and where they are and what they would, I mean, the whole issue is you're trying to see what they qualify for, right? So who you work with is very important, the knowledge level and what they have, programs they have access to. So in general, you would typically get a couple years W-2s, a couple months bank statements, pull credit, and that's what we would look at it as a lender. And the first thing I always would recommend is to get with a lender, find someone you're comfortable with that has a certain knowledge level that's going to be able to help you, and again, provide good information and access, because ultimately the buyer makes the decision. We don't make the decision. We just let them know what's out there. And then you would go through that process. You would get a credit pulled. You would get the income and asset statements. If you end up going with a specialty program like the state has, or some of the other community programs, they may do a deeper dive, and they may require sometimes as much as 3 years tax returns, just to make sure that you qualify as a first-time home buyer. But that's basically the process. You're going to look to see where your credit score is to make sure that you meet the prerequisite credit score and what you actually qualify for, as we look at debt to income ratios and theoretical properties. So we would back into a number.
Mhm. You made a really, really good point. A lot of times clients will say, how much am I going to qualify for, or am I? And I said, each person is different. Your financial profile, my financial profile is not going to look like, Joe's financial profile, and it's not going to look like Zaf's financial profile. And all the things that you talked about are part of that profile, their credit score. So, we all have different credit scores based on, what our financial payment history has been. We all have different income based on where we work. We all have a different amount of money saved in the bank, in terms of how much money we have available for down payment or for the other costs associated with doing a loan. So everybody's financial picture or snapshot is going to be different. We all are in different places. We may be married, we might be single, we might be divorced, we might be widow, we might have to pay child support. All of those things would affect, what we look like on paper. So there isn't a one size fits all, but to your point, everybody can provide the documents that give you that information, which, like you said, is the bank statement. Pull the credit score. Talk about pulling the credit score, because people are really afraid about having their credit pulled, in the loan process. Can you speak to how pulling their credit score impacts the score, and why you need that information?
Sure. To do any legitimate pre-qualification, you're all going to have to pull credit. And there's soft pulls and there's hard pulls. We at this time do hard pulls. And the difference is when you do a hard pull, it will hit your credit score a couple points. What we find is that when you do a soft pull, that is not what an agency is going to accept. So if we did a soft pull and your credit profile, to use your term, changes going forward for the worse, you may, when we pull the actual credit, you may not actually qualify. When you pull a credit report, the credit report's good for 90 to 120 days. I mentioned documents earlier. To do a pre-qualification, you're not required. We can't require the borrower to provide those documents by law. However, if we're doing a good job for them and to make sure they qualify, it is best if they do provide the documents, because then you have a stronger pre-qualification, because we've actually vetted their income, we've vetted their assets in addition to the credit. But to go back a bit, when we pull credit, the reason we have to pull it is everybody uses artificial intelligence. We run them through an automated underwriting system. So you may have heard the terms Fannie Mae, Freddie Mac, FHA, VA. So there's two basic systems that you're running through. You're running through LP, which is Freddie Mac, it's Loan Prospector. And then you're running through the other system, which is the Fannie Mae system. Different programs will want the automated underwriting from a certain system, one or the other typically, right? So we'll run those through to make sure that, nothing's ever 100%, but that you're 99% sure if there's purity in the information that was provided, that we can give the loan, right? And the reason we have to do that is, again, if you run it through a certain agency with this certain program with the state, let's say, they may require LP on one, they may require D on another. And if there's something called a USDA loan, that those will run through their system is called the GUS system. They have their own proprietary system that they use. But we, again, run through those systems, checking the documentation so that when we put our name on a pre-qualification letter, again, nothing's ever 100%, but we're pretty darn well sure that we can give somebody a loan as long as nothing changes, which you want to have as a buyer. And when you go to your realtor or you're making an offer to a listing agent, they know that we've at least vetted the information.
That's really important. And we get into conversations all the time about the difference between a pre-qualification letter and a pre-approval letter. Can you speak a little bit about the differences between the two? And if you give one or the other at your bank, what type of letter do you typically give out?
Well, this is what I'll say, right? So we do a pre-qualification letter, even though we've collected documentation if they're willing to provide it, and we've run it through the automated underwriting system, and we get an approve or an accept or whatever for that particular client with that theoretical property. Technically by law, to provide a real pre-approval, it means an underwriter has had eyeballs, a person has had eyeballs on that file, and it's been fully processed. A lot of companies will hand out and call it a pre-approval, but it's not a pre-approval because they've done nothing more than what we've done, which is we've collected documents where we can, where they're willing to provide them, run the credit, and run it through the system. So we stick to the letter of the law, and we call it a pre-qualification letter, because an underwriter, a physical underwriter, has not reviewed that file. Because we typically won't do that, and we can get in a little further in our conversation. I'll kind of give you our process flow, and you could see the point at which we would have an underwriter look at a file. So again, by definition, a pre-approval means that loan's been fully underwritten. An underwriter has reviewed that file, a pre-qualification is anything short of that. But when we do them, we've gotten the information, as much information as we can from the borrower, and done our best due diligence on it to provide the good pre-qualification.
Gotcha. Now, an underwriter, for those people who don't know, like, who are they and what's their
Yeah,
role,
that's
basically?
interesting, right? Because people think of them as being ivory tower. They are underwriters. They do exist. They're actual people, and they have years of experience. Most of them start out in processing and they graduate to become an underwriter. So they're the individuals that they've been trained. They have certain designations. So to underwrite a VA loan, you have to have a certain approval level. To underwrite a FHA loan, you have to have a certain approval level. So they are involved in our process for sure, and they're actual people. It's an actual position.
Mhm. And what's interesting is, people provide documentation up front, and then it goes into the underwriting process, and they may need to provide the documentation again, or different documentation. And what I tell people is that it's the underwriter's decision that matters. So there may be additional information that they're going to request when you get to that stage of the process, and you want to provide that information so that a determination is, they're the ones that are going to make that final determination whether the property is lendable, and they want to provide those resources to you to be able to purchase that property. So it's kind of a two-step process. They're approving the property and they're also approving the person together, for the transaction to move forward. Is that kind of accurate?
Yeah, that's accurate. So if I may, I'll kind of give you our process, which is a little kind of reverse engineered from most companies. So what you said, spot on, but it'll be a little bit different in the way we do it. So what it typically happens with a loan is, let's say you have an agreement to sell, you've had an offer to purchase it, accept it. So you provide the purchase agreement. In a perfect world, we would have already had the income and asset documents. We may have to update some of them. We take a formal application then based on that specific property. We try to verify the taxes, get an estimate for homeowners insurance, go through all your closing costs, take the loan. Typically in this day and age, they're signed electronically. We'll send them electronically. If need be, we will get them wet signed or mail them to you. And then what will happen is that application's completed. The loan then goes into an opener in our process. And what that opener does is the opener will order the appraisal, which we will need, to your earlier point, to verify the value and the condition of the property, and any other ancillary stuff that the processor or underwriting will need. So some IRS forms, flood certifications to make sure you're not in a flood zone, things like that. So that's standard in the industry, right? It goes from the loan officer to the opener. But then what we do differently is, in a standard transaction, most places I've seen, the loan will then go to processing. And the processing is kind of the conduit between the buyer, loan officer, and the underwriter. And they'll review the file and then put it into underwriting. We do it differently. We actually send it to underwriting first from opening, which I like, because what that does is that expedites the process for the approval. So within 48 to 72 hours, typically from the time the loan's opened, we'll have an approval or a decision from an actual underwriter in reviewing that automated underwriting that we said and all the documentation that was provided, and we'll be able to provide a commitment. And then it goes back, and what we like about it is then it goes back to the processor, and then the processor will basically chase any paper to backfill again, to your earlier point where you're saying they may ask for additional information. We try to make it as streamlined as possible. It's not perfect, or it's an imperfect process for sure. Again, when a buyer provides something, a bank statement may have a large deposit on it that maybe the loan officer didn't think was an issue. And the underwriter may say, hey, we need to document what the large deposit is. So a lot of times, or a loan officer will pick up if we're missing a page of a bank statement as an example, but we may have all the pages of the bank statement, but yet the underwriter may not think page 4 is clear enough. So they may require that we get cleaner copies, again, to your point. So a lot of times when it comes back, it's because something needs to be clarified, and or some of the information provided led the underwriter to ask an additional question. So it's not a situation where the underwriter is trying to just see how much information they can get from you. They're just trying to cross T's and dot I's to make sure that that loan, wherever it ends up in the secondary market or at an agency, that it meets all the guidelines and we've done our due diligence on it. So hopefully that wasn't too much information, but that gives you our process. So then it goes back to the processor. The processor then again chases any outstanding documents, and then it'll go back. So where our process will differ a little bit, because it goes to the underwriter first, we'll provide the mortgage commitment. But of course, in that period of time, we won't typically have the appraisal back. So you were spot on that the underwriter underwrites the appraisal, but that'll be typically after the loan approval, because the appraisal wouldn't have been in for review yet. And then the underwriter does underwrite the appraisal.
Gotcha. It's interesting because.
Go ahead.
Oh, you were going to say something else?
No, go ahead.
Okay. No, I was going to say it's interesting because a client will start off with say Zav, and they're working with Xavier, and then as they get into the process, they get another person, and they don't understand, who's this new person, who typically is the processor, or from the description that you're saying, maybe the owner. So it's typical in the process that they're going to be dealing with 2, possibly 3 people once they get into the process further.
Yeah.
Is that accurate?
I would say not so much with us, because the loan officer is always the point person. We do open the lines of communication once the loan goes to processing, so that the borrower has an open line of communication and can provide information to the processor. But it is not typical for the underwriter to have direct contact with the client. What's nice about our company and is because we're a community bank, so we have 2 branches in New Jersey, 1 in Pennsylvania. So we're financially very sound, but yet we're very nimble. So part of that, of being nimble, is that we have had it where we've had a self-employed or a really technically challenging file where our underwriters have got on the phone with the loan officer and the buyer to help them out, to make sure that we got exactly what was needed to make the file, approvable, and then to be able to consummate it. So that happens on rare occasions. So I like that. We do have the ability to do that, but the underwriter would not typically have contact. So what's going to happen is you're going to have the loan officer, then you're going to always have the loan officer, and then you're going to have the processor reach out. They'll introduce themselves with a phone call and an email, and then you'll know that you can work, that the loan officer and the processor are working in concert to file to closing.
Okay.
But you are correct. There's a lot of there's a lot of people touch a file, for sure. A lot of people touch.
Yeah. There's in a real estate And there's so many people who are involved, and this is just like one section of it. Very, very important section, because with the financing, a transaction is not going to go forward, whether they're paying cash or if they're, reaching out for funding for a loan. Those two things, the money is very important too, because there has to be an exchange of value, you know, give the
Sure.
money for the house, right? For
Exactly.
things to move forward. So it's really important. And I don't think people understand that how many people are working for them to get this done, from on the lender side, on the real estate side, on the title side, on the seller side. There are a lot of people, the inspections side, there are a lot of things that are going on to have the transaction move forward. And I think more people understand kind of all of the moving parts. So they don't have to get all the way into it, but just to have a working knowledge of it is helpful. So I really appreciate you explaining how the cog works, so people, one, they don't get frustrated. That they realize things are happening while the paper is being processed, the information is being processed while they're waiting, and the to expedite, having the documents that they need, if they can get those documents in advance, like I said, pull that information together so it makes the job easier on your end for things to go through. And the other part about process in terms of the things that they need, there's a cost for doing business, right? So um, the down payment and then the cost of um, doing the loan are all fees that show up at settlement. But before we kind of get into that, I want to, if you could talk about the programs, because the down payment is going to be different depending on what program people are using. So, what programs does First Colonial Community Bank have available for buyers in this market?
Okay. Well, let's look at that conversely. So, and then we'll go through them. Basically, other than reverse
Okay.
mortgages, which we won't even get into, but other than reverse mortgages, we pretty much have every other product. So, if you look at in a suite of products, you'll have regular conventional loan, right? And depending on if you're a first-time home buyer or again, the quality of your file, you can go with as little as 3% down. Then you would have your FHA loan, which FHA is a minimum of 3.5% down. That's a loan through HUD. Then you have your USDA, which used to be called the Farmer Home Loan. It's now rural housing. If you're in an area where you can qualify for that loan, you can go with 0 down. And then you have VA. If you're a qualified veteran, you can go with 0 down. And we will be rolling out, which won't differ too much, it just is a little heads up. And Xavier's not even aware of it at this point, but we're working on our own portfolio product for first-time home buyers in low to moderate and certain zip codes that are underserved, where we're going to have our own product. And that will be with a minimum, in most cases, of 3% down. And we will, and I can't give all the details because they haven't been finalized, but there's a situation where we're subsidizing things for them. Some subsidizing things for those buyers, whether it's subsidizing some of the closing costs, that we'll be able to provide for them. And I think that's basically it. We also do home equity lines, and not that it helps necessarily with residential, but we also do commercial loans. So we have a lot in our suite of products. We have a lot of offerings.
That's Mm, excuse me. That's really, really good. So you said I got a tickle, excuse me.
That's
You have the FHA, which is 3.5% down, the conventional 3%, USDA and VA are 0% down,
mhm.
and a new product that's coming soon.
Right.
Excuse me, for first time. It's an affordable product or a first time home
It
buyer
it is.
product. I
Yeah,
missed that part.
correct. It is affordable. It's going to have an either or option where if you're in a certain underserved zip code and or you're a first time home buyer, you'll have benefits. We just haven't I can't talk about it in detail because we haven't finalized all the details on it, but it's soon it's coming soon, so stay tuned on that product.
Okay. Okay. That's pretty cool. That's pretty cool. And what would you say separates First Colonial Community Bank from um, other lending institutions that you say people say, "Hey,
Well,
I want to do business with you."
I think we're not going to be all things to all people, but I think we're really good at the basics. We offer most of the products. I kind of gave you our how we underwrite first, which I think is a huge win for the borrower and the other parties, the selling agent, the listing agent, the seller, to know that they have a mortgage commitment in hand that quickly. And again, just being nimble. We're in the market. We support a lot of community activities, um, and it's a good place to work. It really is. It's really enjoyable. And again, there's a lot of times I've worked at bigger companies where only SVPs and VPs and EVPs can talk to an underwriter. But here is like Xavier has been with us for a few months. We created a position for him, and you've already had a lot of interaction with underwriters.
Yes.
We can always go to them. Everybody really works as a team, and you made a really great point earlier about how many people are involved and how everyone is basically an advocate for the transaction. And the simplest way that I always put it is, we don't get paid based on how bloody we make the buyer, right? By beating them up. And we also don't get paid to say no. We only get paid when we do transactions. So, and that goes for any company, to be fair. I mean, any loan officer or company you're working with, they really should be your advocate because they don't get paid to tell you no. They get paid when they produce a loan and send it wherever they're sending it to be compensated. So everybody should, and again, but with our company, everybody's swimming in the same direction. Nobody says, "Oh, that's not my job." They roll up their sleeves, they get in, and we always look at how can we make a file, how can we help that person.
Oops. Uh-oh. Something popping on the screen here. Uh-oh. Did it go away? Okay, there we go. Thank you for that. I think, you know, this is so weird. My system is doing its own thing here. I think it's really, really great. We had our introduction through the Southern New Jersey chapter of the National Association of Real Estate Brokers, where you all came in and talked to the agents there, and you've also helped sponsor some of the events that we do in the community, and it's been a great relationship. We've got a deal going with Zav, which is going moving forward. So I'm just really, really happy and excited that you guys were able to come on today and share about the process of, you know, purchasing or getting the loan. Any other tips or information about the loan process that you want to share with our listeners?
Yeah, I would just say that there's a lot of again, back to one of the first points I made. There's a lot of product out there. We have access to a lot of it, so there's down payment assistance, be it through the state, county grants, where we have, again, just like with you folks, we have good working relationships, where we can provide alternatives and options for people, and they're too numerous to go over in this kind of format. But if they have any questions or are interested in finding out about any of that, I would say reach out to Xavier, and we love to help people. So
Yes.
Awesome. Awesome. So if folks want to contact you, what's the best contact information?
Of
go ahead.
course. They could give me a call, text me, whatever's easier, more convenient for them. My direct number is 856-952-9041. Again, you could call, text me. Even if you want to email me, my email address is xroman, that's XROMAN, at firstcolonial.com, 1stcolonial.com. Be more than happy to answer any questions you may have, and explain the whole process to you as well individually if you prefer.
Awesome. Awesome. I just want to thank you both for being here today. Anything else you want to share before we wrap?
No, I think, well, there is one product that may be of interest to some of the folks that may see this. Is within the suite of products for the NJHMFA. We're one of the few lenders that participates in the police and fire retirement system loan. That's a great loan. They can use it multiple times. There's only a couple caveats to it, which I'll be glad to share if they reach out to us. And that they price that particular product only twice a year, mid-February and mid-August. And right now, that product is 5. Well, I don't want to say the interest rate. So I'll have to give you an APR, and I won't have it, but it's well below market, and it's a specialty product for anybody that's in the police and fire system that qualifies.
Oh, okay. So if you're a police officer or you're a fireman and you are watching this broadcast or you're listening to this broadcast, there is a special program. There are special funds that are set aside for you at great rates that are below market value than other folks. So reach out to First Colonial Community Bank, excuse me, First Colonial Community Bank, and take advantage of that. And I really encourage people, because there are a lot of programs that are specific, and the money is sitting there waiting. So take advantage of it while it is there. It's a really, really, really good program. There's a teachers program too. Is that still in effect? The teachers program, do you know?
Yeah, there's a teacher program. That's one that we don't participate in particularly, but it is available if you want to check it out. I think that's through the New Jersey Teachers Association or the National Association of Teachers. So yeah, but I'm not that familiar with it, because that is one product that we do.
Gotcha. Okay. Well, this has been really, really, really great. I'm excited because I think it's important for people to understand the loan process. I think it's important for them to know what they need to do to prepare and to get ready, and to make the process as easy and as smooth as possible. I think it's really, really great because you guys are great guys that
Thank you.
you've been introduced so that people can reach out to you and utilize your products and your services moving forward. So I really, really thank you both for being here today. And I want to thank our listeners and everyone who tuned in today. I hope that you all received something of value. Again, be sure to like and subscribe on the channel. There's lots of content on ways that you can maximize your wealth building power now and in the future. And that includes your mental wealth, your financial wealth, your health wealth. Wealth comes in a variety of packages. So stay tuned in. Here at Lyonsview Realty, we provide ESP, and now there it is. That's expertise, solutions, and patience before, during, and after the sale. We assist sellers, buyers, and investors build wealth, and real estate professional build careers in real estate. So again, I hope that you receive something of value today. If you're looking to buy or sell property, or if you're looking for a career in real estate, you can contact Lyonsview Realty at info@lyonsviewrealty.com, or go to our website, www.lyonsviewrealty.com. And if you're interested in improving your health wealth, check out Meatless Mondays, our podcast on health things. And we have Cooking with Clara. As you all know, I'm on this health-based journey. And so I've started some cooking classes, and there's some other information and things basically to assist you in having a healthier lifestyle, because it doesn't matter all of the assets that you've got if you don't have a healthy body, which is your number one asset. You won't be around too long to enjoy any of it. So check that out as well. If you follow me at all, you know that I'm always saying, have a hashtag Lyonsview lifestyle. And people say, what is a Lyonsview lifestyle? That is when you actualize your dreams into reality. It's the possibility of what's available when your life is in order, when your finances are in order, when your health is in order, and when your spiritual mindset is in order. So I just want to thank you. I really want to thank you guys for tuning in. Hopefully you can join us again next Friday. Stream live every Friday, 9:30 a.m. Eastern Standard Time on Facebook and YouTube. And until then, we hope to see you again. We want you to keep living your best life. Thanks again. Thanks, guys. I appreciate you so
Thank you,
much.
Clara. We really appreciate it.
And
stay blessed.
Have a great day.
All right. You as well. You as well.